Let me ask a question about the proposal that the Obama administration put forward was a 25-page, basically, framework for corporate tax reform, and yet, you know, if you're going to be serious about corporate tax reform, it seems to me at least that you've also got to have the individual tax reform integrated into that because of the way that so many of the business tax returns are filed today. And I guess my question is, do you think it makes any sense to do corporate-only tax reform, given that most business income is today earned by pass-through businesses? And should Congress consider base broadening that will raise taxes on those who pay taxes at the individual level in order to pay for lowering the corporate tax rate, which is essentially what you would be doing if you just did the corporate side only?
Well, my understanding of the proposal is that it's more than corporate, that there actually are changes that occur at the individual level too. My preference would be to do tax reform on the whole income tax together, probably the estate tax as well, collectively, and fix the entire code. I mean, there's certainly reasons to want to fix the corporate tax system. Our rates are high relative to the rest of the world, and we don't raise much revenue. But I think revenue-neutral business tax reform would be very, very difficult to begin with. And if we're going to do tax reform, we should fix the whole thing.
Agreed?
I agree with that.
And do you agree that it creates essentially a two-tiered system? If you do corporate only, you may have small businesses that are going to be paying a higher income tax rate than corporations in this country.
I think it's better to do tax reform across the board, and so that there is a sense of shared sacrifice that Len mentioned earlier. You know, I think that it's very difficult to do this base broadening reform if you just broaden the base in certain parts of the tax code, because people are going to resist that if they feel like they're being picked on and no one else is. So I think you need to do the base broadening both in the individual and in the corporate, and lower overall keep overall tax rates low.
Agreed, Mr. Mitchell. Yeah.
If I have heart disease, diabetes, and cancer, I want the doctor to cure all three. So I obviously prefer the comprehensive approach. But if the doctor can only cure one, I suppose that's better than nothing. But yes, I agree with my colleagues on the panel. Yeah. If we could fix the entire mess, life would be good.
Yeah, it would leave some pretty sick patients, though, if you only did part of it, I would think. You know, all of the, if you look at some of these proposals, too, in the budget in particular, that to tax dividend income as ordinary income, you really would be dramatically increasing the tax on investment income. In fact, it would triple. You'd go from 15% to 39.6%, and then when the 3.8% tax on unearned income comes in for high earners because of the health care bill, you would have essentially a 44% top marginal rate on investment income, and plus you've got that income already having been taxed at the corporate level. And so there was a recent study by Ernst & Young that said when you take into account the double taxation, the top tax rate on dividends, you would go from 50.8% to 68.6%, and which would be significantly higher than the rate of tax on dividends imposed by literally all of the OECD countries, and as well as many of the sort of our major economic competitors in countries like emerging countries like Brazil, Russia, India, and China. So when the president rolls that out, it seems to me at least that it really does have the potential of hurting America's competitiveness with those around the world who we compete. So could you comment on how that kind of a drastic increase in the tax rate that would apply to dividend income to a level well above our competitors is likely to affect our economy and economic growth and our competitiveness?
I haven't seen the Ernst & Young study. It sounds like they're assuming that the income is fully taxed at the company level, the corporate level, and part of the problem is that there's wide disparities in taxation at the corporate level. Only about half of the income is subject to tax. You know, better approach is to try to broaden the base so you're taxing all the income the same way and then tax it at a lower rate. But I can't comment on that particular study because I haven't seen it. Yeah. And I should also point out that what is being proposed for dividend taxation would still have dividends be taxed at a lower rate than they have been for most of the history of the income tax back to World War II.
Yeah.
Again, there are costs and benefits associated with raising or lowering tax rates. So, obviously the cost to worry about is when you raise marginal tax rates that high, what are you going to do to private incentives? The benefit of raising tax rates is you'll raise revenue from that. Even at a high marginal tax rate, it's still not so high that it's going to actually reduce revenue as you raise the rate. So it's a trade-off.
Dr. Mitchell?
I think the Ernst & Young study, the best way to understand it is that even though, as Len said, effective rates sometimes at the corporate level can be lower, usually if a company is earning profits, any additional profits will be at the marginal rate of 35%, and it's the marginal rate that determines incentives for additional expansion, production, job creation, and things like that. So I look at that Ernst & Young study as being very worrisome because, as was already mentioned in our discussion, capital mobility in a modern globalized economy is enormous, and I do worry that we send out a signal that it's better to create jobs, to expand output in countries other than the U.S. Now, interestingly, the Obama administration, Gene Sperling the other day was saying, well, maybe we could solve this by getting all countries to agree to a minimum corporate tax. That's sort of like, well, if we all agree to do bad policy, then maybe taxpayers have no escape. I think that's very, very worrisome mentality in terms of how taxpayers should be treated.